The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. Dow's down 43 at 33,717 off a 700-point move on Friday. That was just a fantastic move. Just real quickly, I'd like to go to this. I have a whole bunch of webinars, but I'm always talking about the narrow rectangle. Wonder if I can find it. Yep, there it is. So let me just click on here and lift this up, and then I can show you the narrow rectangle. Get rid of that. There it is. So I always talk about the large rectangle and the narrow rectangle. The narrow rectangle is the one that goes for a long period of time, and it can stay in a trading band a lot longer than your patience. And at some point, it might pop to a D, E, or F above peak. That's in the Chapman methodology of peak. D, E, or F above the upper horizontal trend line. And if it takes that out, the midpoint after that move, when it comes down, there's a real good chance that it's going to test the lower trend line at the bottom. So let me see. So what I've done is I put in blue. You look at this long between that was 310. That was on the 2nd. So on the 2nd, that was Sunday. That was Friday. No, how could that be? Let me check that out. 310, 5, 6, 2, 3, 4. Yeah, that's right. So what we're looking at is we've been in this narrow trading band between 40, after such a spectacular move, between 42.97, say, and 42, I think it was 42.80. Yeah, 42.80. For all that time, just stuck in this narrow trading range. And then last night, look, it rallied a little bit, pulled back, rallied, it held the green and then returned pink for a second, 9-period moving average over the 14. Now I'm watching this closely because in the 10-minute chart, when it goes above that and pulls back, that's very important. So if the E-mini, this is the June E-mini, trades for 2 10-minute bars below 42.87, there's a real good chance that not only will it test the 42.80 level, but it should slip under it and then try to get back into the rectangle, and then does it make an arch formation like a dreaded H and take out and start moving down towards the 200-period moving average of 42.70. That's kind of my scenario right now. Let's see what happens. We've got I didn't mean to do that. It's moving too quickly. I want you to get the 1 minute. Yes, that's like an Eiffel Tower, single leg 8, spike to the upside. I drew this in earlier where the 1 minute chart ran the green 9-period moving average, and then I put in a left side, right side price time match, which said 42.87 was the target. Well, it was at 87 or 88? 42.88, and it should be hit by 10.06. It actually hit it exactly at 9.58, had that big single leg spike to the upside, and now it's doing what I call, it looks like an uppercase A. I always call it Eiffel Tower A failure pattern. We'll see if this is a failure pattern, because it should take out this left side low and go even lower. And then you start dealing with this. So this on a very short-term basis, spectacular move, just a kind of a digestive phase. I was really impressed with the fact that you finally got a move in the financials, but now they have to hold. XLF, this is the financial S&P Select Financial Spider Fund, had a big push to the upside, leg C, but all within the containment of an H going to an M pattern. KRE, which is the regional banking ETF, had a fabulous spike up leg C, but it's given back a huge chunk. It's at 40.84. We're going to be watching this one closely. The IAI, which is the broker-dealer ETF, big move up, but it's a leg D. It's pulling back a little bit. And the whole thing is, if you look at the financial press, which I don't really recommend to do that other than to just get some knowledge, just kind of information generally, but not as your guide to the market. They're two separate things. One is the press, meaning press does what the press wants, and it very seldom has anything to do with the stock market. After all, if the market had dived on Friday like it did after the statement on the jobs and then stayed down and went even lower, what would have been the headline? Market falls because of jobs, fear of jobs increase. If it goes up like it did on Friday, what do they say? Oh, it's running because of the jobs increase. So they get it either way. They've got it right no matter what, because whatever they say is history. It's kind of, you've got your headline. Now, where does it fit? It's not that the headline comes from whatever happened. So don't regard that as your end all and be all. But now look at this. The S&P is in a leg E. Could be a Chapman wave instant restart. That would imply that, in fact, we've got a move that goes E/A, F/B, G/C, and then a D, a whole new buy. But I'm looking at this on balance volume is kind of the reason why I didn't want to get too carried away on any buy signals today is that I needed to see what happened. We did have one buy and it's pulled back a little bit from our entry point. We'll see what happens there. In other cases, we've taken off our some very short-term positions, and I'm ready to do a lot of different things, but I need to see how the market reacts after that. It was really a 3-in-1 session. You know, sometimes I talk about a 2-in-1 session where the market has a move up to about noon, and then noon it doubles again. This was really a 3-in-1 session. So one of those sessions, 250 points, should be given back. It doesn't have to. I'm just saying that's what you'd normally see with a huge Barbosa candle like we saw. That's a candle with no wicks, huge candle up or down. So in this case, I'm watching this closely because we just hit 42.96. We did go to 40. There was the high today, 42.96.58. We're traveling now, still up 59 cents on the S&P at 42.82. Looking at the QQQ, it's a little more complex there. It's up 99 cents at 355.56. 353.93 is the target from way back. This is way back in April the 1st, the week of the 1st of April, 371.80. Oh, wait a minute. Whoops, I just skipped a step. 353. Oh, that was the high. Sorry, that was the high of 4 days ago. Yeah, 371.83 was, if we can get back to that April high of 371, and we're only less than 20 points away, that is remarkable action after everything that's happened. And that really speaks to the internal strength of this market, which is kind of one of the reasons why we've remained long since the October lows is this is a very important right side phase in the cup formation on the S&P. Look at the steadiness that we're making, new highs and actually higher lows, higher highs and higher lows. I like that very much. And I'm still calling this a leg A, gray leg A in the second or third trading day. Two, but this magni finally crossed positive. It's down 50, S&P is down just a fraction. I'll be right back.
We have exciting news, Tigers. This June, Tim Ord of the Ord Oracle will be hosting 2 webinars providing insight into his renowned market timing methodologies. On June 8th, Tim will delve into the S&P 500, teaching sentiment indicators, identifying market bottoms and divergence, and so much more. On June 15th, Tim pivots to the gold market, taking a look at cycle analysis, ratio studies, advanced decline indicators, and other important tools for analyzing this sector. Sign up today on TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. for daily market overviews that give you direction on the key indices, selective stocks, and commodities. Subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks, we're back. So looking at this rectangle formation, yes, we did dip under. We haven't closed the two bars underneath the 4290 trend line that we're looking at. Right, let me get that exact number. I think, remember, 4148 was the one at the bottom. And we broke above that. Yeah, 4290 is going to be this midpoint that I'm picking for this week as resistance, support, whatever it's going to be. That's the level to watch. And then if it takes it out on the downside, 4280 has to be key support that holds. It can pull back and then come back into the rectangle. And then if it travels below 4278, then that 4273 10-minute 200-period exponential moving average becomes the key. And this is that Eiffel Tower, straight up, straight down. It's not quite straight down, but it's making lower lows and lower highs, and especially lower lows, and went all the way to 4285. So we're watching this. This could be another dreaded H pattern right here. This is just a normal, 700 points. You could be giving back 300 points in the Dow right now. You could be giving back 35 points on the or 27 points on the S&P, and that would just be normal action. So far, this is impressive to say. Buyers are still wanting to come in. This is also part of that end of the month, beginning of the month phenomenon that we see where fund managers do their buying and selling, but a lot of buying. All right, watching this very closely. We're going to go back to our story here. QQQ extended. I'm calling this at this for now. I'm just calling it an F. It could be an alternate count because it did have a Chapman wave right there. Instant restart right there. With a gap, it's a little unusual, but that is an instant restart. So this could be F/B, but so far, very good action. And if I follow it up and say the QQQ, I always relate it together with the SMHs. They're pulling back, a little dreaded H there. This is the pattern that we talk about where you come down sharply, you try to rally in with just at a peak A or a B. It turns over within a couple of bars and takes out the left side low. Just watching that closely. I think that's going to be the case as these semis and NVIDIA. Oh, that's right. I wanted to do NVIDIA. I got asked about it on the weekend. So the question was, you had spoken about it's not really a 3-bar rule that the late Dave White used to always talk about, but it has different connotations for the upside and different connotations for the downside when there's a huge gap to the upside. So my theory has always been that on the upside, if there's a huge gap, the gap bar, in this case is the bar of, right there, a gap bar of 25th of May that had a low of 366.35 and a high of 394.80. That's a big distance. And that's a gap that was tootling at the 300 level the day before. I mean, that's just a huge gap. A good part of this will be filled in over the period of June. It doesn't have to fill the whole thing, but in some part of it. But my rule is that on the upside, if within two, it's preferably two, could be three, but preferably 2 bars, there's a close above the gap high. In this case, the high that was 394.80, within 2 bars, and it can, out of 3 bars, it holds above that. That is phenomenally strong, because then it can go on for about another week and a half before it even gets back into the body of the candle that would be in the 380 area. But if it turns around and then starts to close, first of all, when it does that, it gaps to the upside and then stays on the upside, and it takes out the high that was the gap bar high. That says that the body of the candle, and that's usually the low of the body. In this case, it would be the open, which is 385.23. That should become very strong support. Well, the low on the 31st of May was 378.22. It went under it, and the next day it gapped up, and it's been very strong since. So that's got a whole cluster of 5 bars. The reason why I want to spend a little time on NVIDIA, because it was the leader of the semis, and whatever it does, the majority, not all, but the majority of the leading stocks in the semiconductor index will probably follow quite a bit. So what you've got here is a pullback, and it says that now I have to go all the way into about 7 to 9 bars. So this is bar 6, bar 6 after the gap bar. So that's with the gap bar, 7 bars above the 300 level where it started that rocket ship to the upside. And that just says that if this is going to become an H pattern, let me just draw it in right here. I drew it in a little bit wider because this, you're talking about bars going quickly. So that says within a couple of days, if you take out, if NVIDIA takes out the support of 378.22, and it might be a struggle to do that, but if it does take it out, there's a real good chance that it will very quickly test the low that was made of 366.35 on the 25th of May. Reason why I want to spend just a moment on that is, look, the semiconductors, there's your arch formation. That's the dreaded H. What is the dreaded H in the Chapman wave methodology? I'm always looking at, there we go, add 3 basic patterns: straight up, straight down, cup formation, arch formation, combination of 1 and 3 and 1 and 2. This is 1 and 3. Come down sharply, make an H fade at a peak A or a B, take out the left side low, and then it can go quite a bit lower. On the right is where it's very strong, like there, going straight up, pulls back, and then makes how it deals with the left side higher, 134.31 in the SMHs from in May. It just spiraled right through it, and that's very bullish. So this is bearish, and this is potentially bullish. And where are we right now? We've got this pattern right here. It's pulled back, and it's a peak A. Today it could form a peak A, a gray A, because it's not a buy mode or anything like that. How it deals with it is going to be important. Look at the other stocks. Look at advanced micro devices. Now, advanced micro devices is quite interesting because, look, it spiraled up, and it hasn't had that big follow through after the big move to the upside. So it's kind of, in fact, today it's gone lower than the left side low. So I'm just saying you've got to be careful here. Intel, which was the laggard, is pulling back sharply after a big spike. So I'm just putting this into perspective and saying, fantastic move, but we really did 3 days in one. You would normally find some kind of a give back day, and I think it'll be Wednesday. That's going to be the real test of, are we going much higher? Was this a tremendous breakout? After all, you had the XLI. This is the S&P Select Industrial Spider Fund. We went to a leg D, maybe a peak day, but all within the rectangle. I've still got this Chapman wave stork leg formation here. I'm just putting it in there. It's not 100% accurate, but it's there. But the XLY, this is going to be fascinating. Thank you, Coda, for that email that sent me. I hadn't updated my S&P Select Consumer Discretionary Spider Fund. Look, this is completely different to the Select Consumer Staples Spider, which has been very poor, made an arch formation and retested, having a good session today, had made a peak D in the weekly. So let's go to the XLY and say, hey, if that's discretionary Spider, that's really good action. Look how the weekly chart is just walking the 9-period moving average. And today you've even got some follow through to the gap up Friday with another leg going to G/C. It's 2 days late for the Chapman wave left side, right side price time from the height made the 150s back in February. So here it is at 157.91. So it's testing that left side high. This is a really important session because I think we're going to see whether or not we pull back and then we make higher highs this week. I'll be back in a moment.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman here. We're looking at Microsoft up $1.10 at 336.51. Question came in, review Microsoft. about the 200-period moving average, that whole cluster that was made for a couple of months, actually, about a month, from end of March, beginning of February, let's say, to the beginning of March. Look at that. You had this beautiful crossover of the 9-period moving average, and just for one session, it's happened to a couple of charts. It happened, I think, even to the S&P. Just for one bar, it went negative, or the Dow, one bar, it went negative, and that was around about the end of April, around the 24th, and then it went back to green. Another gap. That was a gap right there. Where was it? Yeah, that was a gap, not a gap from the high of the low, but it was a gap from the closing price that took off back in March. And then what we saw was the gap right here that at some point will be filled in 2023, but right now it's not going to be filled. We're talking about the gap that was the low of the 25th of April, 275.37. The very next, that's the low, and the high was 281.60, and the very next session on the 26th of April, let's see, the high was 299, the low was 292, big gap, 292. So what we're looking at is it's still walking the 9-period moving average. Only a couple of once it tested the 14-period moving average with a doji candle around about the 22nd of May. Bam, it's gone up, and today's high is just underneath the 337.50 high of Friday. Today's high is 337.37, just 14 cents or something away from breaking out. So this is really good action. The MACD is good. Stochastic's flat at 86%. On balance volume was overbought. Now it's just it's good. And the price is way over the 9-period moving average, of the 9 is way over the 14, with 329 support and 325 for each one. I like it very much. It's been, when you consider what happened back in the dot-com bubble of 2000, after that, Microsoft just got slammed. It was a leader, and then it reconfigured itself. It's just an incredible thing, the way they've managed to. And it's interesting because when I listen to Bill Gates, he's I don't know if you're supposed to say this sort of thing, but he's not anywhere as coherent as I used to hear him. I mean, I'm not talking about mentally deficient. I mean coherent in the sense that he used to be quite articulate about what he used to say about Microsoft, and now he's talking about so many other things that, and I don't even know what his position is at Microsoft anymore, but he was at Microsoft, and at this particular point, it's kind of fuzzy. So they've got leadership there that has just been absolutely commanding and taking over the whole cloud and operational systems and subscription area, etc. So I like this as a both the chart is saying as a business plan, it seems to be working. And as a business plan, 349.57 was the high in November of 2021, and it goes to 213. It's a huge. What is it? 50? Maybe a 60% decline. 213. No, it's not. Yeah, about a 40-something% decline. And then what happens is it rallies back, and it's almost at that all-time high. That is really impressive. So I like it very much. But the most important thing is what you really want to know, I'm sure, is where are support levels? So the support levels, if there is a major turnaround, look, I'm going to go to the bonds and the yields in a moment. So that's something that you cannot ignore. But if I'm looking at Microsoft as support, there are a lot of support levels. The most important is the weekly 315 9-period moving average and the weekly 14-period moving average of 304. So that means, yeah, you could see a 9 to 11% correction in Microsoft this year if all of a sudden the market does turn down. So far, it's leading the way. It looks fabulous. I'm going to put it together just for the moment with Apple. Look, Apple is at an all-time high as we speak. It hit 183.99. The previous high was 182.94. Look at that beautiful cup formation. And fabulous action. In this case, the 173 to 169 of the 9 and 14 period moving average support levels on the weekly chart. On balance volumes getting both in daily and weekly getting a little bit overbought, and that's the reason why I'm saying how the market handles what happened Friday, because of that 3-in-1 session is going to be so important. There's nothing here that says, oh my God, crash. Yeah, I don't see how we can. There are people that are talking about Elliott wave, etc. In other words, if you're using Elliott wave and you're looking at this as a potential one of the bigger legs to the downside that can occur if it starts to unfold in the next, I'm looking at time as well, so it would have to be within the next 3 weeks. It would have to be in June. That's a different complexity altogether. I just don't see it. I don't see how you can talk about crash type scenario when you're looking at Apple at an all-time high, when you're looking at these key stocks that have come back so strongly. Yes, you can say XLF, horrible action, not participating. Even today, it's pulling back. You can talk about the IAI, which is the broker-dealer ETF, giving back a chunk of Friday's gain. Not great action. You have those areas, but if you're looking at the XLI, which is the larger pure industrials, it's holding the 9-period monthly, 9-period moving average. Okay, the 9 is over the 14. That's good. MACD is not great, but it is making a W formation. So the histogram in the monthly chart here on the right is improving. The stochastics running is up at 75%. So I don't see that unless, and now we're going to go to the unless. Actually, let me just quickly finish here. Gold did rally back from being down again. This is the action that I've been talking about in gold, that it isn't just plunging to that. It is making lower lows and lower highs, but it hasn't got that plunge that gold can often do. And in this particular instance, because the financials, that's the economy, the banking sector, is still such a query for everyone looking at the analysis of these banks, especially JP Morgan, the big money center banks. I've always said that gold, a lot of the time over the years, decades that I've been looking at, I'm from South Africa, so I've been watching gold for a long time, still have some Krugerrands. But at the same time, when you're looking at the JP Morgan, it's doing very well on the daily and the weekly. The monthly chart is still saying it's lagging, and you want to see these financials moving. And that's the reason why I think that countries have been saying, hey, if the financial system is going to be under pressure here with everything that's going on, gold is our medium. And then silver just kind of either sometimes leads, sometimes doesn't. But in this case, silver's saying there's still a big digestive phase going on in silver. I'll just do high-grade copper because I do want to lead into the bonds. Just a tad, it's at 3.74. And now as we're going to the break, I'm going to put on the US 30-year T-bond continuous contract, and it's up for 30 seconds. I'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So a question came in about Lulu. That's Lululemon Inc. apparel company. Had this huge earnings beat, and it had spectacular Friday. It gapped up huge. One day it's trading the 300. Wasn't NVIDIA in the 300? Yeah, a big move. So this goes from the 330 level. NVIDIA, I think it was 300. No, well, let me just, NVIDIA. Whoops. NVIDIA. Yeah, 300, and popped up to that 370 level. So this is a little different in that it popped up and then it's failing. So the question about just an analysis of Lulu. So Lulu trading right now down 944 at 356. As I see it, this had the chance. I don't know if any of you was. There are a lot of you out there that know my work quite well. And you know that in the Chapman methodology, there's a technique that I call the rogue wave. What happens is you've got all the indicators suggesting being short is the right thing, and then out of the blue, just like what happened? There were no indications from the MACD or the stochastic. There's a news-related up spike. You find it a lot in the biotech area. There's a big spike, and it takes out the previous high. Just long, this did not do that. I'm just talking about the rogue wave. And it takes it out, and holds above the previous high long enough for those people that were long and finally decide to get out to say, oh, no, I knew I shouldn't have sold. I've had it for so long, and I sold it, and I'm going to get back into a little bit, and it holds there long enough for them to get back in a little bit. And for those people that are short, saying, oh, it's over the last high and it's holding there. I got to cover. And then the very next bar is this ugly red bar, or that bar turns around that same hour and just flips around and closes at the low. And the next day, and the next thing you know, you're traveling below where you were before in the sell mode. This didn't do it, but it had all the characteristics. That doji candle high of the 5th of May, of 389.06. I wonder if there's a round number anywhere around there. No round numbers, huh? Wow, just missed it. 397.99 open the very next day. Anyway, so that just said to me that this had all the characteristics of that high that was made at in the 389s on the 5th. Yes, Friday's high was 386.33. It missed it by maybe $3, right? After a massive gap up. But everything about it suggests that was a rogue wave. what this is, there's another technique that I call the right shoulder failure. That's like the dreaded H pattern, where it rallies and then fails, and then it collapses. So I don't like this action at all. Not only that, in the apparel area, if you're looking at so many of these apparel stocks, let's see, what's the one? Just Ralph Lauren, not quite the same sort of thing. Yeah, Ralph Lauren. Look how poorly these stocks in the area have, these name brands in the area have acted. So I'd be really wary. I would not, if you're looking, now I don't know whether you went short or you're looking long, you've had it, but all I can say is that Lulu, if it didn't do what it did Friday, but held in the 370s instead of slumping into the mid 360s. If it hit 360 something and then closed at about 370, and today was maybe 368, I'd say, hey, it's holding really well after such a spectacular year. This is the exact opposite. So I'd be really careful. If you manage to get a gain in this stock, I would just say take something off. If it then rallies very strongly, that's fantastic. I take something off, but if it closed under 353, the 9-period exponential moving average, the 14-period moving average, and it's still very negative with the pink under the 14, I would say I would get rid of a chunk of it. You can always get back in if it starts to make higher highs and higher lows, but be really careful. Now, if you're short, today's high of 363.64 was the high. It opened just a little bit lower than that. I would make 364 a stop and make it a trading stop on part of it, like it's trading at 356. I'd have about a 4-point trading stop, a 3.5-point trading stop on part of the position if you are short anywhere from above here, above the candle high of today. So that's the way I'd be looking at it. PVH is that another question? PVH is in the, that's right, the apparel area. PVH is PVH Core. I used to have this all notated and everything, A, B, C, D, E, F. It made a peak F in the monthly chart, made an arch formation, held that very nicely. Now it's made a higher rally from that low, kind of the midpoint of the entire range, and then it's pulling back and it's gapped down. Yeah, I'd just be really careful. Now, there are a couple of things the question came in, what about the long rectangle formation? Where are we? Well, look what happened. Wrong thing. Let me just go to Shopify right here. That was the next question. And then I'll go to the E-mini. I'm not doing anything right now. I'm just already done with everything I was doing. So that was a potential arch formation. But look how it walked the 9-period exponential moving average. And it went, I remember I said 3 bars underneath the 42.90 level. Well, it did 2 bars, and the third bar closed above it. And now we've got a nice strong bar. This is telling me that there are buyers out there, and that the devastation that occurred. I'm going to go to I'll do Shopify in a moment, and then I'm going to do Caterpillar. So look at this. It's saying now, instead of the arch formation, we could in fact have a cup formation. And where would that go to? This is going to be the very strong resistance level. Go to that particular candle right there. Move it to the right and say, right there, make that green. See, once it starts to roll over, but it's holding the 200-period moving, the 9-period moving average is so strong, you've got to be careful. Now it's a little bit vulnerable. So I don't want to spend time with this one. I want to go to was Shopify. Shopify has now made lower lows and mostly lower highs. And it's got this pattern that I do like. It's almost like it's a falling axe formation, but it's really more like a channel. And it says at any point in the next 2 to 4 sessions, if there is a spike that goes above the high that was made on the 30th of May, which is 61.49, that would be very good action, because then you look at the left side high on the left side of the 22nd of 64.05. But it's stuck in the range and making lower lows and lower highs. If that green 9-period moving average turns to pink because somehow or other it closes under 57.40, and right now it's at 58.60, I'm going to say to you, be careful, because it has made a peak D a couple of weeks ago in the weekly chart, and now it's at a fantastic move from the 23 level all the way, more than a double to the 65s. You can expect. Oh my. We've got another segment coming. I'll remember what it was in a moment. Basil Chapman, Dow's down 77, S&P is up 6. Bifurcated market. We'll be right back.
We have exciting news, Tigers. This June, Tim Ord of the Ord Oracle will be hosting 2 webinars providing insight into his renowned market timing methodologies. On June 8th, Tim will delve into the S&P 500, teaching sentiment indicators, identifying market bottoms and divergence, and so much more. On June 15th, Tim pivots to the gold market, taking a look at cycle analysis, ratio studies, advanced decline indicators, and other important tools for analyzing this sector. Sign up today on TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all Tigers and Tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
I remember now what I wanted to show you. Look, Caterpillar had a spectacular move. I mean, I done what I did my shows. side low of late April, early May, but it is making this arch formation, keeps coming back to lower lows, but not yet taking out the left side low, and all of a sudden, ugly Tuesday, Wednesday, Thursday, Wednesday, ugly red candle, and then Thursday kind of holds okay, and then whop, this rocket ship up to the top, and now it's pulling back a little bit down 372 at 222. So this is what I'm looking at. How do we get out of this? How do areas like PAVE, which is the ETF, the global ETF development infrastructure ETF, in a G/A, how does this, and the weekly chart just going steadily, peak A, peak B, peak C, but still the MACD is only just turning positive. The stochastic's very weak. What happens now? That's the question. And I think we saw such a big move on Friday that gave us hints that some things are working, some things needed that spurt to the upside, and we now need to just digest this. How does it digest it today is really important. Don't forget, Tim Order does a special show on Thursday. Go to the front page. Back. At least Steve's able to do the show today. But if not, I'll just do the news and we'll see what happens next. And otherwise, great programming here at TFNN. See you on Tuesday. Check out my opening call, daily newsletter.